net of all fees and management fees and performance fees for our investors over the course of that first 5 quarters. So it's not the first year was like 64% net, but the first 5 quarters it was life to date through the end of last year was like 85%. So net, and so we're really happy about that. But because of that, we had investors in that first fund who said, well, can we add to our investment? And unfortunately, Charles, because of the nature of the fund, we closed it. Why did we close it? Meaning we had an opening, we took in the capital and then closed it. You can't put any more capital. Well, why did we do that? The reason is because when you have public and private investments in a limited partnership like this, it introduces something called layered accounting, where if you have investors come at a later stage, then they're going to have a different mix of investments. We're taking investors now, and accredited investors. Not my rule; it's the SEC's. I wish we could change that, but the only difference in this fund, Charles, is that because we are doing the same strategy, it's the same exact strategy as the first fund, and so when we make an investment, we'll just split it up pro rata between the 2 funds, depending on how much capital they have available. And so, but the only difference here is that because it's layered accounting now, and it's open forever, then when we go to make a private investment, the only investors who will get part of that private investment who are the investors who are already in the fund. And the reason for that is because once we make that investment, we've got to side pocket it, because it wouldn't be fair for us to make that investment and then if it does really well and other new
all the tools you can bring to the game.
Yeah, that's a good question. So we are what we do is we're on a Bitcoin standard, so we don't have any cash in our accounts. I mean, minimal amount of cash just for operating expenses and to fund upcoming privates that we are expecting. So, but other than that, we've got Bitcoin in our treasury. So if we have, so like a typical hedge fund might be sitting on some cash in an environment like this. Well, we're sitting on Bitcoin. Okay, so now Bitcoin though has been volatile in its history, especially around market volatility due to risk off situations. And so being a little bit concerned with that, even though Bitcoin has been acting at the top end of the allocations of the S&P, that's been a pretty good hedge along the way. And so we've got some put strategy, some put spread strategies in both the SPY, the spiders, and in an Apple. And Apple's an interesting case because we believe that it's priced at a place here that it hasn't really had the same drawdowns as the rest of the market, the S&P in particular. And so if the S&P draws down and we have a correlation to one event where it's a sharp, steep drawdown, when Bitcoin is up at near its highs of where it's been, and we don't feel like it's just going to break through and run to a new all-time high, then typically your high beta to Bitcoin companies, things like MicroStrategy or your miners, your public miners, they'll typically be at all-time highs as well, or they would have run like a large amount, huge amount. It could be 2-3x what Bitcoin has recently, and they may have gotten ahead of themselves. So if we're looking at a strategy like this and we just need some capital to do it, then we may reallocate from there rather than just selling Bitcoin, if that makes sense. It really depends on the situation though. The new 21 so far, Semler Scientific and some of the other ones, and nothing against those. This is just different. And MicroStrategy is light years ahead for one reason. That reason is that Michael and his financial team, they figured out a way to monetize that volatility. How did they do that? So when MicroStrategy years back, you'll hear it from Michael himself, from Michael Saylor himself, is that it was kind of like that strategy was contracting, was dying, because they were, software as a service and getting fees, and it was just declining to the price of Bitcoin. And so, and because those converts are now tied to a volatile stock, they're convertible into MicroStrategy Common, which is now volatile, matching the volatility of Bitcoin. Well, you realize that, well, gosh, every time I sell a convert, my stock gets more, and I turn around and buy Bitcoin, my stock gets more. It depends on, first of all, like you said, the strength of the team and the company. How is the company generating revenues? How are they buying more Bitcoin? And then, so like, what is fundamentally, what's the underlying company? Do they have revenue or not? How is that revenue being generated? How much of that revenue is going to be allocated to Bitcoin? Or what's another way that they'll be able to buy Bitcoin? Those are really, really, really important questions up front, right there. And then once they start doing that, with Jack Mallers as CEO, and this is a little bit different take on it, but the underlying stock, if you fully dilute that, you're looking at almost a 6 today. It's really moved in the last few days. You're looking at almost a 6 times the underlying value of Bitcoin where the stock is trading. If you take the pro forma valuation of the CEP holdings of the new company, and so do we love that company? Do we love that strategy? Yeah, we do. We think it's a very interesting. So what should a multiple be there then? Well, if you look at the traditional financial companies, they're trading at book values of about 2.1. Like JP Morgan is trading at a long-term book value of 2.1. And funny enough, look at where MicroStrategy is right now. It's trading at 2.1. So we think it's fair valued here. This is if it goes down to like 1.5, we would be buying a lot of it. If it goes up to 4 to 5x, we'd probably be selling into that, 3, 4, 5x. Why would we do that? If nothing has changed, all things remain the same, then we believe that the valuation would be rich. Through of what he did, there was a lot of disappointment. There was speculation that he was going to just do an end zone run around legislation and just go and do an executive order to go buy Bitcoin through some different ways that they could do it, but he didn't. What he did was he said, we will hold the Bitcoin that we have on our balance sheet from seizures, from fraudulent or illicit activities, and we won't sell that. And if we want to buy Bitcoin, though, it's got to be budget neutral, meaning you got to either sell something else or find a way that it won't add to the debt of the country. It's a great book. It's got a ton of information about all this. But to tell you simply today, in the current environment, what is concerning is that the valuations of stocks have gotten way ahead of themselves versus just the gross domestic product, the GDP of the country. And now the GDP has been revised down, so the valuation of the stocks they've gotten way ahead of themselves. And so that's a concern. The only way that they can stay at these valuations is if they print more money. A more likely scenario is that we have some sort of event, whether it's a credit event or some sort of black swan that we're not expecting, Charles, that causes another steep drawdown. You've got to borrow so much money at the U.S. government level that there's absolutely there's no choice but to hit the markets with a money bazooka in order to shore them up and make sure that there's stability in the treasury market, because really ultimately all that matters to the U.S. government is stability in the treasury market, so it can keep borrowing, so it can keep operating. And so that's what it comes down to. That's your another first principle answer, though, is that that's all that matters. And so if that happens, you could see a print where the Treasury and the Fed step in and
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.